Hello and welcome again at Stocks Advisor. Today we will talk about social capital Hedosophia Holdings Incorporated, traded at New York Stock Exchange, ticker name IPOE. Well, social capital is actually really very interesting position because we see that after having a very nice and fast move by beginning of the year, almost in one day, we now see actually, so after also having a steady move, we saw kind of shift of the pattern. Here it was shifted with upwards move with some volatilities, and then actually moving average 20 worked here as a support line. But then by mid of February, the breakage of the trend took place, and here we started to decline strongly, and decline actually was taking place with two major channels. So the first channel was quite fast. It started at mid of February and all the way to almost mid of March, being pierced several times with those shadows. But then it turned to, let's say, a more slowly moving declining channel. And the very interesting thing about this channel is that actually this is the channel that also by its top follows so-called entrapping when between SMA 20 and 50. So the when the price pierces higher, it's either let's say repelled by moving average 20 or by moving average 50 here. And what is nice about this channel, it's slower in its slope. It's actually slower, and its slope is not that steep as for first channel. So it means that deceleration is actually ongoing, and the price is not going down that fast. And we also see this beautiful bouncing, and today we actually made 9.97% after hours, which is during the day trading, and after hours it's also going really positively, 4.09. So market is also observing similar situation. As we discussed, we see volume is increasing here, and after having one positive wave and a small dip to negative area by MACD, we are again preparing for another positive wave. Looking at RSI, it looks like we are really heading towards overbought area. So everything is quite dynamic, quite positive, quite bullish here. Therefore, the levels we could still observe, let's say safely, it's a lower part of about, let's say just about 2056. And the higher limit here would be in the range of about 2391. So this would be the expected channel to go on the rebounds, and therefore you can take profit out of there, entering from the current channel and exiting in that channel. So this will allow to make a profit up to 10 to 15%, and here it will be again profit advise our classical ranges, so 10 to 15%. Because although it's quite fastly moving chart, but it's still better to be a bit safer on the safe side. So take the profit within this range from the money allocated in the position. Re-enter if needed or check other opportunities. Never hesitate to take your profit. Don't wait too long, otherwise the position might expire and you will actually bear losses instead of taking profit. So this would be the first level to enter, and since we are already plus 4% at after hours, hoping that we will go a bit lower by opening of next trading session, so we'll start at the lower levels. We might, let's say, place our buy orders in this range, which will be just middle of the channel here and the upper part of it. So it will be 1593 at the bottom, and at the top it will be actually 1705. With this, let's say, channel, we hope again to rebound higher and to go to the level of 2045, 2391. So let's make here a first call out for us that we don't forget these levels. So we'll be 1593 and actually 1705. So this is the first level to buy, expecting immediate rebound. So this is the first chart combination that is expected, the most probable one. Still, what we need to keep in mind that what might happen by opening, it might open higher and then show the red red candle or dark candle, similar to what we saw, for example, here by February, or in many cases you can see here you have a combination of dark red, and this means that we could immediately decline, so it will be the breakage of the wave and we could go lower. If this is going to happen, we really need to prepare to buy the second, let's say, technical level, which is forming here, to buy through, and this would be exactly the level between actually 1294 and 1392. So this is the second channel, and this channel is, if the first one is neglected or cancelled, let's say, then you can buy here quite safely. So these are two technical most expected channels to buy in and rebounds, making 10 to 15% profit. And of course, the third one, we always discuss it. This is the channel we need to keep in mind to mitigate the risks if any negative catalyst is coming in. And these are usually the levels where the most principal trade was taking place for the last half a year. And if you look at those, you can clearly see that this is just the upper part is about 1179. So this is where the wave of second half of December finished before starting to pull up, and the lower part would be where the wave actually started in second half of December. So this will be between 1105 and all the way to 1179. So this is the first level the third level to buy, really the risk mitigating level. So let's write it here for ourselves: 1105 to 1179. So this is to mitigate risks if any negative catalyst is kicking in. While people will be exiting in masses, you can just buy again here and safely make your target profit from 10 to 15% of money allocated in this position. So with this being said, it's the best optimization to make the profit and to grow. And that's always what we do. We don't speak about, let's say, very hypey terms like, oh, there is huge upside down or whatsoever. We really provide in our opinion videos advice or opinion how we would trade. Of course, this is just educational video. If you like it, you can follow. If not, not. But that's how we trade, and that's how we make profit. So if you like this analysis, this approach, don't forget to subscribe to our channel. Still talking how to buy through those channels, because we always say we buy non-linearly, and means that we buy with different portions in every channel. Here it's a classical 5-portion play, because no extra risks or, let's say, benefits are expected here. And it means that the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel. You can buy with 2 portions through the second channel if the first technical pattern is not confirmed. And if there is any negative catalyst kicking in, you keep remaining 2 portions to average down there for kind of a doomsday scenario. So this way you will still be able to exit with 10 to 15% target profit from all money allocated in this position. So this way is the best optimization for profit versus loss. And what you see now on the screen is actually the trading card, so-called trading card, which you can save, print screen or print out and use it as a guide for trading with this position for coming days, weeks, following these levels and advices to buy and exit. So good luck with this one. If you like the analysis, again, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.